Good morning, ladies and gentlemen, and welcome to Viscofan's annual results meeting. Once again, just as in previous year, the presentation will be structured in three parts. To start with, I would like to talk about the most significant initiatives we have developed along this year as part of our More to Be strategy. Next, Viscofan CEO José Antonio Canales will carry on with a more detailed analysis of the results obtained this year. Finally, we will discuss the upcoming projects and outlook for this year. The More to Be strategy aims for a transformation of our company based on three areas: technology, cost, and service. This is an ambitious project that already has been in place for the last 3 years, and with which we will reinforce our leading positions in the cellulose and collagen casings, and to become leaders in fibrous and plastics. I would like to highlight that these objectives are being developed successfully in a satisfactory way. Today, our leadership position is stronger than in 2015. We have improved our market share in fibrous and plastics, and we have done the groundwork for retaining control over cellulose yielded ground. Reinforcing our leadership position in cellulose and fibrous has been precisely the goal we have put most effort in. Over the last 3 years, we have made an investment of more than 265 million euros, the highest figure so far in our history, and quite a superior one compared to that made by other companies in the sector. And that fact is leading us towards a growing yet demanding future prospect. Of that sum, 71 million have been devoted to the arrangement of the new production plant in Caseda. We are especially proud of this new facility, and I am particularly excited for the improvements we will be able to deliver both on the product and service, as well as for the increased efficiency and safety and environmental solutions to our workers. Nowadays, there is no longer a plant that has been developed for casing with such disposition of knowledge, resources, and technology. This is a demanding project that requires much of our attention. However, Viscofan runs in a growing and quite demanding business, indeed a very demanding one, and that is the reason why we continue to make investments in other initiatives beyond that main project. As an example of this, we have fulfilled the building of a small caliber collagen casings production plant in Serbia, bearing in mind it is large caliber collagen plant that we are also working to improve in productivity and efficiency. Also, we keep increasing our capacity in China to balance local sales and production, while investing also in new environmental assets. Likewise, I would like to point out that the investment made in our plant in Montgomery in order to boost production and safety, at the same time as we have been working towards the improvement of our plastic division in Mexico. In Latin America, we are progressing efficiently as well, where we are expanding our products and gaining market share. When the investments made in our organic transformation have already been significant, both from a quantitative and qualitative perspective, I would like to emphasize as well the work being done these last years in search for new opportunities that ultimately have led us to a better commercial presence and enhanced portfolio. Starting by the highlighting Vector's acquisition, that has meant an important quantitative change in the plastic division, and which has contributed the most to increase our revenues. In 2017, Supralon meant a perfect blending in addition to Vector's operation, thanks to its converting plant in Germany and its distribution network in France. In February 2018, Transform Pack, a small business with a clear belief in solution and innovation providing additional value, was acquired in Canada. Finally, by the end of November, we acquired our main distributor in Australia and New Zealand, a great opportunity to strengthen our presence in a new continent. Globus has a significant record, not just commercial, but also in terms of production expertise due to its converting plant for plastics and fibers. The enterprise value of these companies has been 33 million euros, a good balance between opportunity and risk. The results achieved, the expertise and knowledge that all of them are providing us with, are a great foundation to the transformation that our company is undertaking. In addition to enhancing our leadership in casings, we keep progressing in the development of new opportunities within other areas, such as bioengineering, where we have invested more than 4 million euros so far in this strategic plan. It has been significantly relevant to the approval we have received from the undertaking the first clinical trials with collagen-based membranes for heart attack implants. This is a long-term and far distant project we have. Even if there has not been any practice made yet, this is a remarkable landmark to us as means great support to our activity in this field for two main reasons. Because it means CardioMESH project goes forward and because it reflects the fact that our facilities, knowledge and quality meet the demanding requirements that apply to medical solutions. Also in 2018, we have progressed in the installation of collagen hydrolyzed capacity in Germany, which has been delayed from its original plan, and now we are ready to augment our commercial activity there. Additionally, in the field of innovation and development, we are working on patents to increase our added value products. As it can be seen, the first phase with the more to be strategy was very challenging and entailed significant investments, operational projects, inorganic growth, and new business activities. This was accomplished with a growing shareholder remuneration in line with a more robust group, both from an operational and financial point of view. Shareholders' direct remuneration has also reached a new record, 220 million euros direct remuneration and 5 million euros indirect remuneration if we add the buyback of shares that have been cancelled last month. Overall, this period, remuneration hasn't ceased to increase, especially in 2018. The Board of Directors has approved an ordinary distribution of results of 1.60 euros per share, which includes 0.64 euros in December 2018 and the proposal of dividend of 0.95 euros per share that will be paid the following 6th of June. In addition, 0.13 euros per share were distributed as an extraordinary dividend from a litigation indemnification in March. To summarize, a 12% higher remuneration compared to the previous year, and 28% superior to the figure prior to the more to be strategy, all of it maintaining firmness in our balance. A balance that has been managed with financial discipline. Therefore, of our own funds have been reinforced by the extraordinary results, producing positive results. This strength in balance, we can think on projects as demanding as we present here, as well as to counterattack more volatile and difficult times, such as year 2018, and of course, to think in new projects that prepare this company for a great future. Thank you again for joining us this morning. It is my pleasure to give the floor to José Antonio Calades, who will now comment the main result of 2018 and the initiative for 2019.
Thank you very much, Mr. Chairman. Good morning, everybody, and welcome to the annual presentation of results of the Viscofan Group. The key financial figures reached this year have been severely impacted by forex and cost environment, the most adverse in the last few years. Despite this fact, Viscofan continues to grow 1% in revenue, up to 786 million euros, and 3% in like-for-like terms, thanks to the increase in volumes and a better price mix. An overall positive performance compared with previous year, although below our guidance. Recurring EBITDA stood at 190 million euros, down 1% in like-for-like terms, and 8% once the forex impacted is included. Reported EBITDA was 209 million euros, slightly below 2017 level. Finally, the net profit rose by 1% year-on-year, up to 124 million euros. The market has grown again in 2018, and so does Viscofan, with a like-for-like positive performance across all reporting areas. It is noteworthy the negative impact of currencies in LATAM, where our outstanding performance with like-for-like revenue growth of 12% has been completely eroded, leading to 1% decline in reported terms. North America recovery also stands out, with 2.7% year-on-year growth in like-for-like terms. However, this is still a very demanding region in terms of competition, and we have to keep working towards the improvement of our margins there. US dollar weakness versus the euro is behind the 2% year-on-year drop in reported revenue up to 224 million euros. Revenues in Europe and Asia was 448 million euros. The first half of the year saw a strong performance, while the performance in the second half was weaker, an issue that we will be discussing later on in the presentation. Even so, Europe and Asia were up by 3% year-on-year in reported terms and 0.6% in like-for-like terms. If we look at this revenue bridge, we can see how Viscofan continues to demonstrate its growth capacity. Casings contribute to the consolidated growth with more than 21 million euros. Cogeneration does with 1 million, and the integration of new companies generated an additional revenue of 15 million euros, largely driven by Supralon sales. This positive performance has been almost completely undermined by one of the toughest forex environments faced by Viscofan in the recent years, mainly due to the US dollars and the Brazilian real. The forex evolution has eroded revenue growth by around 30 million euros, or almost 4 percentage points. Revenue growth in a year of transformation. The commercial activity has been focused on volume growth and price mix improvement in order to counteract the higher cost pressure in production inputs, especially caustic soda and the glycerol, whose prices went up by more than 28 and 40% respectively, driving up costs in more than 6 million euros year-on-year. Conversely, our More to Be transformation strategy has requested high levels of investment, new plants and new growth projects that are reflected on not only in the increase in the workforce, 2% up year-on-year, with personnel costs up by 2.6%, but also in the 10.7% year-on-year rise in depreciation cost. Our transformation projects are underway. At the same time, we are improving our operations on a daily basis. 2018, record levels of production speed and efficiencies have been achieved, absorbing many of the costs associated with the startup of the new plant in Caseta. Thus, other operating costs are slightly below 2017. Finally, EBITDA is down by 1% and EBIT by 5.5% due to the aforementioned impact of higher depreciation costs. 2018 is a year marked by an intense operational activity, but a special mention must also be made of the opportunity management, which has generated non-recurring gains of up to 19.2 million euros. As you will recall, the Ian sale in 2015, our former vegetable food division, did not include the outcome of ongoing litigation of patent infringement. In the first quarter of 2018, the compensation was collected as a result of the court ruling, recording more than 8 million euros in our operating result. After this ruling, the meetings were intensified to reach out an agreement with respect to the rest of the concepts that were still in dispute, an agreement that was reached in the second quarter of the year with an additional impact of 6 million euros. Finally, after a long due diligence process, the acquisition of Globus Company was done in late November. And according to the accounting standards, the purchase price allocation to the different assets was carried out by the third party, generating an accounting profit of 5.5 million euros. Once the operation expenses have been deducted, it has generated an additional profit of 4.6 million euros, reflecting the low level of risk associated with the acquisition. The startup costs of the new plant in Caseta are not classified as non-recurring results. We consider these costs as part of our ordinary activity, although they will not be in our cost base every year. From an operational point of view, 2018 has been a challenging year. In the EBITDA bridge, it can be seen that the like-for-like EBITDA is down by 2.7 million euros, reflecting that our top-line growth has still not been enough to offset the higher operating expenses of the year. In the first year of their integration, the new companies in the scope of consolidation are still not contributing to the EBITDA, but they are underway to contribute positively in 2019. But once again, the currencies have had the greatest impact in consolidated EBITDA, eroding by over 14 million euros or around 7 percentage points of EBITDA growth. At reported EBITDA level, the aforementioned positive non-recurring results offset this impact. As a result, 2018 has been a year of revenue growth, but with lower margins, mainly driven by the increase of raw materials and energy costs, which have eroded EBITDA margin by 1.5 percentage points. And once again, Forex with an additional point. The commercial initiatives aimed at improving the price mix, especially in the second half of the year, will have a positive contribution in margins also in 2019. Once again, I would like to emphasize that the higher fixed costs and the cost from the learning curve of the new Caseta plant haven't had a relevant impact in EBITDA margins, thanks to the aforementioned savings and yields obtained in other plants. Net profit amounted to 124 million euros, up 1% year-on-year basis. EBITDA decrease is mainly due to the Forex impact, although part of this impact is recovered by positive exchange differences and others that contribute 3 million euros compared with negative exchange difference of 9 million euros in 2017. In other words, 11 out of 14 million lost at operating level due to Forex are recovered. 2018 results, even lower than initially expected, are still very solid, and operating cash flows allows us to carry out our strategic plan with 72 million euros of capex, including 20 million of the new plant in Caseta and more than 7 million euros for the acquisition of companies for future growth. I would like to comment the working capital increase, 48 million euros on the previous years, for a twofold reason. On one hand, a higher level of inventories for a better transition to customers is required due to the expansion plan and the startup process of new plants. And on the other hand, there's a deceleration in sales in the third quarter compared to the expected growth that will be observed progressively. As it can be seen in the chart, the operational and balance sheet strength allow us to increase shareholders' remuneration, both with an increase in dividends distributed over 78 million euros and with a share buyback. Thus, our net bank debt stands at 80 million euros or around 4.4 times EBITDA, a low financial risk profile that will allow us to move forward in our plans of transformation and future growth. Because Viscofan keeps growing, it is true that the weak performance of the Asian area last September was an atypical situation driven by calendar and stock management in distributors that caused a temporary delay in our growth objectives. In the fourth quarter, Viscofan resumed historical growth rate. Consolidated revenue in the fourth quarter was up 5.5% year-on-year basis and 3.6% in like-for-like terms, driven by volumes recovery and a better price mix. Forex had a neutral impact in the quarter, eroding growth by 0.2%, but far from the 8 points that eroded in the first quarter of the year. The positive evolution in all reporting areas is behind this recovery. Europe and Asia was up by 2.8% in Q4, and an upturn versus 1.4% decline in Q3. This growth rate is below its potential, but it's worth considering that the comparative base in the second half of 2017 is higher due to the exceptional positive performance of the area that has not been repeated in the second half of 2018. Revenue in North America rose by 7.5%, strong growth pace compared with the first half, and reflecting the improvement of our positioning in this area, which continues to be the most important casing market worldwide. For this reason, this is probably the market with most commercial activity from all market agents. In this last quarter, 12.7% growth in Latin America should be pointed out, even with a currency that still does not contribute positively in the quarter. Viscofan has reinforced its leadership in the area throughout the year, but the Brazilian real weakness erodes like-for-like growth. Therefore, there has been a good quarter. An all-time high in quarterly revenue has been achieved at 208 million euros, thanks to 6% growth in casing sales compared with a slight decline in cogeneration revenue. Growth coupled with higher profitability. Recurring EBITDA in the quarter grew by 5% year-on-year. The upturn in quarterly EBITDA is mainly driven by the solid performance in like-for-like terms, up 3.6% year-on-year, together with a positive forex that had a positive contribution for the first time in the year, driving up EBITDA growth by 2 points. Commercial activity achieved during the second half of the year addressed towards the improvement of price mix, altogether with a good performance of volumes, accounts for this betterment of the operational result. We are talking about a good quarter that again generates growth in the key financial figures, from the top line through the recurrent EBITDA, which surpasses 50 million euros. The acquisition of Globus in November has generated as well an accounting profit that sets the reported EBITDA close to 55 million euros. All this growth passes out onto the next net result, which grows 17.5% compared to the previous year, up to 35 million euros. A good quarter that helps to make visible the growth opportunities for Viscofan, and which are what we have encouraged us to carry out an intense operational activity in recent years. Capex levels in 2018 remains above depreciation and amortization, despite the 33% decline versus previous year, with a final figure of 72 million euros. Investments have been mainly aimed at improving processes, including 20 million euros invested in Spain in the new cellulose and fibers plant. We are not only improving in Spain, but also in the rest of the group with improvement projects. 38% of the investment corresponds to the rest of Europe and Asia, over 9 million euros to North America and around 7 million euros to Latin America. While we are still 2 years to go to eventually undertake all the actions included in our plan, there's a lower need for investment in the second phase of the More to Be strategy, and a wide range of improvement projects that I would like to discuss right now. We invest because our market keeps growing. We estimate volumes have increased around 2% in 2018, underlining Europe's growth of over 3%, as well as that of North America, close to 2%. It has not been, however, a good year for the emerging areas, where the volumes have been under the potential rate, around 1%, probably due to the weakness of their currencies. Nonetheless, in the preceding years, emerging markets in Asia, Latin America, and Africa have led the average growth and will do so for a while. In absolutes, developed markets do represent more than 60% of the casing market. Yet the notorious imbalance between population and meat consumption in Asia, Africa, and Latin America pushes ahead our market growth in those emerging regions. On the other hand, developed markets keep growing, as we have seen this year. New food products are included on the supermarket shelves every year, with the rise of snacking and convenience product amongst other value-added products. This market is very demanding and requires to be constantly investing in growth and releasing new products in order to reach customers on every corner of the planet. Throughout the More to Be strategy period, Viscofan is getting ready for such a high demand. We have broadened our positioning with a twofold outlook through these past years, by continuing to reinforce our footprint in those regions with more potential of growth, as well as improving our range of products with the acquisition of small industries that complete our portfolio. No geographical nor technological frontiers means that we finally reach a unique positioning in our market in terms of technological know-how and presence. In addition to the development of a network of productive centers, we have been focused in one of the most gripping projects of all times, the establishment of a cutting-edge cellulose and fibers technology in Spain. 2 years ago, when we initially came across our strategic plan, we were just about to start the building process of a new plant in Caseta, a project that helped us to establish fibers in Europe, improve our time to market, and to being more ambitious in terms of market share. This project was meant as well to bring about the transformation of our most traditional product, cellulose casings, by means of a technological revolution. Today, that project has become real, one of the highest investments in the story of the Viscofan Group, with over 70 million euros allocated so far, but the outcomes reached by now are encouraging. 80% of the fibers project has been already completed, and we are not just talking about capacity levels, but about the product that is sensitively better than to the previous ones, the reason why our volumes in fibers are growing at double speed in Europe. Still, we haven't reached its full capacity. First, we have to advance in the process of qualifying our clients. As you know, this is not a standardized process, as it's necessary to meet each of our clients' needs. Mostly if our desire is to obtain a market share based on performance and not just in price. This process is much faster with regard to cellulose, where we are willing to switch over 50% of our own capacity. Therefore, the process of qualification will be more agile. In this sense, according to the initial plans, we have already completed about a third of this project. The most demanding part was the civil engineering and the installation of the first modules. Operational results are very satisfactory so far. The learning curve has been fast and the levels of productivity efficiency reached can be compared to those of our more traditional productive units, although the speed of production and the level of automation is significantly bigger. We could say the investments we are running now are more productive, as we are investing in new equipment, an investment that generates meters and returns. Therefore, we will already see some savings out of this new technology in 2019. The project will continue this year and the following one with the accommodation of new productive models. The merger of both technologies still needs to absorb more fixed and variable costs. For that reason, to be able to gather those expected savings, an adjustment towards the capacity of the more traditional technology must be done as we continue increasing the capacity of the new equipment. Nowadays, Viscofan is a more robust company than it was just 3 years ago, before initiating this strategical plan. Although the underlying situation has been sensitively more adverse than we expected. On one hand side, cost per consumption has suffered a significant increase in prices, especially in commodities such as glycerin, caustic soda, and energy. Meanwhile, commodities performance has maintained a moderate inflation. Even though we had expected less adverse circumstances, it can also be stated that Viscofan's performance has been superior to those of other businesses within the sector, proving how firm our business model is, not only in favorable circumstances, but quite especially when major difficulties arise. In this period, Viscofan has gained more than 2 points of market share, and that distance grows bigger if we compare it to the operating profitability share. This transformation process has required to invest not only in new facilities, but as well in other resources, such as recruitment and business structure, which also means an erosion of potential margins. Once of the main projects have been developed, we begin the second phase in the more to be strategy, where the need for investment is sensitively lower and the operative leverage will enable us to improve profitability of the group. This decrease in the need for investment does not mean we will diminish or reduce our activity. In 2019, we will continue disclosing our initiatives with a three-way objective of leading in service, technology, and costs in all of our divisions. In relationship to these projects, I would like to point out the development in Europe of a new technology of large caliber in Serbia, the expansion of the collagen capacity in Spain, improving of plastic capacity in Vector Belgium, and the investment in solutions derived from our industrial project 4.0 in the Czech Republic, towards the improvement of the converting process as well as in the facility of Urdiain in Spain. Our productivity in Asia is expected to increase in China and also in Australia and New Zealand, the advance towards the integration process of Globus. In order to improve our fibers market in the US, we want to carry out investments in the area of costs and technology. Likewise, we will invest in transfer packs productive design, whose specialty enables the transfer of ingredients and seasonings. We have been engaged in applying this solution to a wider sample of casings, although with a more industrialized method with a view to attaining better returns. This process is in line with the development of added value products. Investment in Latin America will strict to market growth. Productivity speed will be increased in Uruguay, and we will increase converting capacity in Brazil, as the growth we have experienced makes us being nearly complete. As we said, even though we keep immersed in multiple projects, the need for investment will be lower in 2019, with a total figure of around 60 million euros. 40% of this amount will be assigned to improving processes, which already includes the investment in Cáceres production plant. 20% of these investments will be dedicated to increases in capacity and an everlasting necessity in markets as dynamic as ours. With regards to our commitment to the improvement of occupational safety and the decrease of our operations' environmental impact, the remaining 20% will apply to those areas. The improvement in profitability and a lower need for investments within a group whose balance is robust will bring around wealth distribution to our shareholders, with a new record in the stream of operating cash flow above 148 million euros, improving the returns of this year's investments. This level of investment is foreseen to keep up during the following years of the more to be strategical period. As we have seen throughout the exposition, Viscofan is far from being at standstill position, and that's thanks to a growing team that spreads its influence wider each year. A leading group of more than 4,750 people that work with the widest range in the casing manufacturers ensemble, with more than over 12,000 references that keeps boosting market share and positions itself up to 33% of market share. A financially robust group that continues working to the development of innovative products and productive processes. At this point, I would like to highlight their commitment and dedication towards Viscofan Group, driving this company to being the highest reference in the markets for over 100 countries worldwide where our products are being distributed. This is the company we are transforming, one that exists in the most relevant markets as well as in those with major prospects of growth. We are present in 4 continents, with the only exception of Africa, where the size of the market still remains scant to request a greater presence. It all has involved a significant effort in terms of people, business acquisitions, and working capital. Once this positioning has been recorded, now it has become the moment for optimizing our operations. We have always stated that with regard to working capital, our business model is very intensive. Thereby, selling millions of meters in every corner of the planet demands a great effort from all of us. However, we don't comply with just this, and we have an ongoing project for the improvement of our working capital in 2019, which consists of 2 points above the previous years. Savings that prove how there is still plenty of Viscofan to be pursued, more to be a company that keeps expanding its border, both geographical and technological, and this allows us for broadening the horizon of our results. In accordance with the objectives proposed for 2019, and as we have already mentioned before, the need for investment decreases, an average 16% lower, down to an amount of 60 million euros for 2019. Thanks to this, we will be able to increase our annual income figure between 6 to 8%, setting sales near 833 and 850 million euros. Also, these incomes will be followed by an improvement of the profitability of the group. Recurring EBITDA will grow as well between 10 and 13%, up to 208 and 2015 million euros, setting the recurring net profit between 117 and 124 million euros, which reflects a growth between 8 to 14%. These are ambitious targets that reflect Viscofan's growth potential in the upcoming years.
As we have commented, More2B involves a profound transformation within our company, and this strategy is being carried out successfully, achieving its main operational goals and also being able to incorporate new sources of growth regarding both geographical and technological assets. Nowadays, Viscofan is a much robust company. We have reinforced our market-leading position under a difficult equation that combines volumes and commercial discipline as the best assurance of sustainable and profitable growth for the long term. This strength has not been visible, however, in our full-year results, as weakness in exchange rates have lessened these improvements. In addition to this, we have dealt with the most adverse context in recent years regarding commodities and energy supply, which not only has hit us leaders, but also other companies in our sector. A better Viscofan is as well a company that keeps increasing its shareholder remuneration, preserving a healthy balance position, a worthwhile placement when it comes to major volatility and uncertainty influencing some markets. A company that has strengthened itself and now faces the upcoming year with optimism and excitement as the market grows and offers new opportunities which we believe cannot be taken on by anybody better than us. The rewards of this strategy will be even more visible in 2020, where our investment will improve the returns in a sensitive manner. Although 2019, this will be already visible for the unexpected new increases in income revenues, recurrent EBITDA and net profit, even a bigger increase also in our cash flows once our investment needs with regard to CapEx and working capital for the current strategic plan have concluded. Thank you very much for your attention.